The markets are near their all-time highs, and we need to take a look at what big tech is up to. I am Dr. Stock, Doctor of Education, and if Santa's reindeer played on the front line in the NFL, I guarantee at least one of them would be blitzing. All right, it's time to take a look at the Magnificent Seven. We'll take a look at the candles on them and also the momentum for each one of them and provide some commentary. And then also, I'll tell you about my Patreon for how I'm playing this market, and I'll tell you about my options course and about the free stocks that you can get from Moomoo, but that's for later on. For right now, I do want to get into the exciting part of this, which is the charts themselves. So we'll toss up here. The first one we're going to kick off with is Apple. And so for Apple, we are actually near that overbought range when we look at the RSI on the daily chart anyhow. And we're also near the all-time high for Apple of about 197, and I have this line here of 195 for you. You can see we peekabooed up over it, and then we sold off a little bit. We also went overbought for a little bit, and then we pulled back. And it seems to be the MO for Apple is that we watch that fluctuation happen. Now, it is possible, should the markets hit new all-time highs, I think we can actually put in a new all-time high on Apple as well, and we can try and test out that $200 threshold. If we hit that, I think that it's possible we bounce off the 200, retest the 195, and then charge onward from there. So we'll see what sort of beat we can get from Apple between now and January, we'll say, because that's when I think that we could see that all-time high hitting in the markets. We have the Fed meeting today. We'll see how that goes for us. If the Fed surprises us, and that could be a bad thing for a surprise, it can move us to the downside. But if they surprise us in a good way, let's say through the Summer of Economic Projections and what they see for 2024, for example, that could be a very good thing for the markets, including big tech when we look at this one. So if we go out to Apple on a weekly basis, take a look at the momentum. We are still in bullish territory, and it has been just an incredible run for this so far. And so a near-term pullback, yeah, well, you could still possibly see it, but we also have some room to run before we get up into that overbought territory like you saw before. All right, we'll jump over to Amazon's weekly. There we go. And so for Amazon, on a weekly basis, we are flirting with that 70 line from being overbought. You can see the trend line that we have here, and we're still below it. If we want to have room above, we have to not only break that trend line, but also break the 150 that's up above it. Let's drop down to its daily chart. There we are. And we're going to change the view on this a little bit so we can see a little bit in better detail what exactly is going on. There we go. I like that a lot more. So for Amazon, a lot of consolidation, moving sideways. We actually have the momentum falling. We want to keep an eye on that one. So should we cross 50, we could actually drop back down off of this. But we do have another trend line that I don't have drawn on here, but it would come right across this way. We could probably settle right around that, like 140, 145 mark is something that you could watch for. Should we break up above 150, then we have room up to about 158 to 160. So we want to be watching for that as well. So let's move on to Google. And Google, looking at its daily chart, oh my gosh, what we're looking at, we had this pop here when I said that for Google, that should we break 140, that we'd fill out this inverse head and shoulders, and we've just sold off from there. We've actually crossed down over the 50 line for the RSI, so that actually could flip into a bearish territory. We are up in the pre-markets. The support that we're pointing to, we are below the 50 EMA and SMA on the daily charts. We do not want to break down below the 130 line because that could cancel the inverse head and shoulders. We do want to see a rebound from here. We got two different resistances to break up through. We have this trend line here and also 140 itself. Should we break over 140 for Google with the inverse head and shoulders still active, we have room up to that 150 line, and so that could be incredible for us, and we do want to watch that to see what exactly is happening. If we look at the longer trend on the weekly chart, you can see lots of declining momentum from what's happening right here. Should on the weekly basis the RSI cross 50, then we could expect more bearishness to come from that. We have room down to about 122, 123 for Google, so we want to be on the lookout for that. If we go out to Meta's weekly, Meta, the prices have been climbing. The RSI is looking good on a weekly basis. Let's drop down to the daily to see where exactly that puts us. Now, mind you, for recent highs, we're peaking right at around, let's actually put our cursor right on that, and I'll tell you, 343-ish is about where we peaked out, and it is possible that we try out that 350. Let's zoom out a little bit more. So where does this put us? That's about 350, and if we go up a little higher to that next peak that we have room up to about 380, 383, and Meta's been very favorable lately. We want to watch that. We do have a little bit of bearish divergence possibly visible here on the RSI and what we have for the candles going on, so RSI dropping a little bit and price action moving up. So maybe there could be a near-term pullback for Meta as well. Although should it pull back, I think that it could have a glorious run back up for it. So that's something to absolutely watch for that bounce off of support. When we go down to the daily level, you can actually see that we retested the 50 on the RSI and bounced up from there. So right now that is possible. Should we put up a little bit more momentum in the RSI, that we have room up above, and maybe we see 350 sooner than later for Meta. Let's move on to Microsoft. We'll move on to Microsoft. They actually had a bit of a selling moment here, and that would be that challenge from Google with Gemini versus ChatGPT, and Google has fallen in that excitement, and then Microsoft has started to slowly climb back up. So it is possible for Microsoft that we put in, go back and retest those all-time highs that we had for Microsoft. So if we zoom way out on this, and let's actually go out to the weekly chart so we can see it better when we'll reset the chart view so it's easier to view on this. There we go. You can see the run that Microsoft has been on, and we are actually narrowing quite a bit. This is going to take a little bit more technicals. I think Microsoft might deserve its own spot in a video. We're going to have to check that out. So for Microsoft on a weekly basis, the RSI is showing us as being an overbought territory. Maybe it settles a little bit more for that longer term trend. We're going to have to watch and see, but we still are in that bullish territory, but overbought. Something to watch out for us on a daily basis, though we do have climbing momentum. So for a nearer term trend, we could possibly see that climb up, and then over time we could possibly come down out of that overbought territory and come back and retest support from there. So I'm going to take just a quick break here, and I would like to tell you about my Patreon. If you want to see how I'm playing this market and see my buys and sells, they're available at my Discord, which is through my Patreon. That link is down in the description. I also have my options course over there, and my NVIDIA and Tesla stock price predictions and earning projections that are over there. And then also down in the description is the link for Moomoo, which you can sign up, make your qualified deposit of $100 or more, and that can get you up to 15 free stocks. So check out that link for those offers. Let's get back into the charts now. So back into the charts, let's drop down to NVIDIA, as I talked about that for my Patreon. So for this one, you can actually see the RSI is actually looking really good. We have the cross over 50. We retested it, bounced back up. So for NVIDIA, we could possibly be bullish from here. Maybe we take another run at that $500 level, and for the first time, maybe solidly cross and keep the $500 level, especially if the market starts to put in new all-time highs. We absolutely want to be looking for that. So keep your eyes peeled for NVIDIA. This is an exciting time where we bounced off of the 50 SMA and EMA and off this trend line that we have here. You can even argue that there's a bit of an inverse head and shoulders happening right now, and that the neckline on this one would actually be diagonally slanted upwards. So we want to look for that. That actually lands us, should we even get up there in the first place and retest the all-time high? We're back up above 500, but there is a lot more room up above that yet. I do still believe that NVIDIA is a $500 stock, and we would be watching for that. Should we break down through this trend line here, we could be coming way back down on this thing, down to like that 430 to 425 level. So we're going to be watching for that for NVIDIA, but the momentum is looking great on a daily basis. Going out to the weekly chart to see how things are looking there. On the weekly, we are still in bullish territory. We had some declining momentum there, and now more recently we sort of settled, and we want to see what direction this goes. Will momentum continue to decline, or are we going to follow what we're seeing in the daily chart for the RSI for the momentum and possibly put it in a further climb from here? And like I said, go back and retest the all-time highs for this, and then possibly even put in new all-time highs, and maybe solidly for a while stay up above 500. NVIDIA is in the market's hands right now, and the competition is rising, and we want to see that NVIDIA continues to stay on top. I still believe that they are way out in the lead. The people who are shopping around for alternatives to NVIDIA's AI infrastructure that they have, it's because they can't get enough NVIDIA in the first place. And they actually have two more series coming out that should be far superior to the competition, which is putting out their new flagship stuff, including Intel and AMD. So let's move on from there to Tesla. And so for Tesla, man, this is a mess. Let me see if I can hide this stuff for you guys, because right now it's just blocking up the chart. There we go. So we've actually been in a bearish channel for this. Selling off, we actually need to break up above 245 and preferably up above 250 to get out of that bearish channel. And should we do that, we have room up to like 260 and 268. And we actually have news on a recall for Tesla for like 2 million of its vehicles. It's pretty crazy, and that goes along with their full self-driving features. I believe, I haven't read into it yet as that news just came out, but I will check in that today to see what's going on. You can see on a weekly basis we have declining momentum. Should we cross down below 50, that's something that could be further bearishness for Tesla. That could speak to a longer trend for them, so we want to watch that. If the Fed does show that they're going to have lower interest rates in 2024 for their federal funds rate, that's very bullish for Tesla. If they stay where they're at, or especially if they move that interest rate up through 2024, that's bearish for Tesla. So be on the lookout for that Fed meeting, for those results in the summary of economic projections, and listen to what Powell has to say. That's going to tell us a lot. By the way, just in case you haven't been made aware of it or watched my previous videos on it, the federal funds rate is expected to stay where it's at right now, that the Fed is not expected to raise rates. The next thing that they're expected to do is to cut rates in 2024. by maybe possibly as early as March. It looks like it might be pushed out to May, though, before we get more than a 50% chance for that cut to take place. So Tesla, on a daily basis, we got to watch this RSI. Should that cross down below 50, that's a further bearishness for us. So we want to watch for that. And I did say that should we break support, we actually came back and closed at that 50 EMA. We're above the 50 SMA. That's a good thing. By the way, the 50 SMA is 233, almost 234, I should say, as we're looking at it. And in the pre-market, we're at 234. So we want to close up above that to keep the 50s as support when we look at the moving averages. Should we break down below that, we actually have room down to about 225, which is where that 200-day is. And should we see further bearishness come out of that, then we could see it come down and possibly retest that 200. And so we're going to have to watch for that round number support that would come out of it. And like I said, for Tesla, should they break the bearish channel that they're in, let me put the drawings back up here for you. There we go. Should they manage to break up through that resistance that we have to the upside of this, and I just hid them again somehow. I don't know how I did that. There we go. Should we break up through resistance on this one? Like I said, 260 to 268. We do have to break the top of that bearish channel, and I'm not exactly sure why it keeps hiding, but that's okay. So let me bring this down, and I'll summarize things for you. So guys, in the markets, for big tech, should we put in new all-time highs for the markets? I think it's big tech that helps us to get there. I don't think that we do new all-time highs in the markets without them. I think the Fed meeting is going to be one of those big catalysts. We're going to have to find out today if that happens to be the case. I think either way, whether I'm right and we move up or I'm wrong and we move down, I still think that Fed meeting is going to be the big catalyst. It's going to be one of those big telling things that we have. By the time you watch this, PPI inflation will have already come out. That means the next inflation report we get is the PCE, and we really want to see how that positions us for inflation to end the year. By the way, I believe that's December 22nd that comes out, and then we'll see how that moves us into December's numbers that we get in January, and then January's numbers that we get in February. And I anticipate good things for inflation, and in terms of the market, that we should see that inflation continue to tick down. It would be nicer if the CPI numbers were a little bit softer than they were, but still, it didn't really put us necessarily in a hugely bad position. I think that we're still all right. So thank you guys for watching this video. I really do appreciate it. Like I said, come and join me over at the Patreon. Join my community members over there. See my buys and sells. Also, Moo, don't forget about your free stocks using that link down in the description. As always, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.